Good morning, UPBOptionMillionaires.com. It's Wednesday, December 3rd, 2014. We started the week off on a negative note. Stock futures were falling. Sunday night into Monday morning, the market hit a low about midday and came off those lows. Yesterday recovered the gap down. You can see this gap has now been filled, and now we're consolidating at this level here and look for a move to record high stock prices like we saw last week. Now, this is a market that remains very buoyant. All the dips are getting bought, and those dips aren't lasting very long. If you look from a long-term perspective, we broke out of a multi-year, 15 years of consolidation before finally breaking out last year, and we're just clearly in an upward trajectory. Say that 5 times fast at 8 o'clock in the morning. And the question everybody wants to know, as they've been wanting to know every dip along the way, is when is that dip finally going to be the last one that's going to lead to a significant multi-year correction? That is a great question. I think the bottom line is you want to look from a long-term perspective and say, oh, stocks are going to pull back. I've been saying it in the chat room at optionmillionaires.com for many years that the least path of resistance is to the upside. You've got 401k plans that offer the ability to short stocks, and you have corporations utilizing low interest rates to buy back stock and issue dividends. So it's a really friendly environment for stocks, and until that changes, just stay with the trend, and every dip gets bought. Another thing to watch for, I would say, that we're going to start seeing popping up in the headlines against the U.S. dollar index, which is up again today. And look at the move it's had. The irony of it is just like with the taper talk. Remember the taper talk? That was supposed to affect the bond market. Bonds were supposed to sell off, and they've done the exact opposite. The U.S. dollar was supposed to be toilet paper, but it's done the exact opposite. Possibly, you could look at one excuse being the Japanese are printing money hand over fist, but look at the U.S. dollar index. Has been rallying really since May. I mean, significant rally, but if you go back even further than that, once it hit its low, it's been a really sharp rally. So what you're going to start hearing, and I'm already starting to see it a little bit, and you can see we're back up to the highs we saw back in the middle of 2010. What you're going to start to see is how our exports are more expensive, and on the flip side, it's cheaper to buy foreign goods when the U.S. dollar is high. So, let's look and see if we can break out. If you pull back a chart from the financial crisis in 2009, there's a beautiful channel here, and we're right at the top side of it. We break out, we can continue up, and this is the high that we saw at the internet bubble. This is the U.S. dollar index, and the dollar yen hit a 7-year high, and you can see it continuing to move up to levels that we haven't seen since 2007. This is the Abenomics. Started really at the end of 2012, where Abe Shinzo has been devaluing the yen in hopes of stoking some sort of growth in the Japanese economy. Let's look at some individual names. Well, first let's go to crude oil. This is crude oil futures. You can see there's a long-term chart. You can see the negative move it's had since a really nice, and if you look at this trend line, you can draw a support line here from 2009. Crude oil futures have been respecting this trend line, and once it broke, a really sharp move to the downside, which is good for the consumer. At some point, it's not going to be so good overall for the economy because you have corporations that, yes, some of them will benefit from the cheaper price of shipping goods like FedEx and UPS and the airlines. But then you have the oil stocks, ExxonMobil and energy stocks that are going to be hit, Chevron, and so forth and so on. And finally, let's go to gold, which is bouncing this morning. Gold futures, you can see there's a long-term chart. We hit record highs here, and we're bouncing short-term. Let me just pull up a short-term chart. Where it stops, nobody knows, but you can see this move up. It had it started a week. I'll pull up a chart of gold right here for you. Let's just look at a couple charts before I do that. GameStop broke through significant long-term support, and I'm looking for $30 for the end of this sell-off, and I think it's going to see a continuation. It's at $35.73, so possibly looking at some $30 puts long-term heading out into next year. Also, another stock I'm looking at is Deere. If you look at Caterpillar's been pulling back, it's under the $100 figure. Deere is heading up near long-term resistance, And if you look, Caterpillar, similar type of resistance, but is at lower prices off that level. See that? Similar type of chart here in the channel, consolidating, looking for lower prices. So Deere also, I think, is kind of reached a point where it could roll over here, especially with oil being so volatile. Let's just move into gold, and we'll put the GLD. And you can see this trend line here. This channel worked great from the middle of 2012 up until the middle of this year. We bounced out of it. We need to get back into it, and I think if that does indeed happen, we can look at GLDs at about a $75, $80 price target here, which is a significant move from where we are right now. But again, look back in 2008, 2007, 2006, when everything is just hunky-dory. Nobody's buying gold. So we're still, if you want to look from a price perspective, we're still in that area where there's some fear in the market because everybody's talking about how gold is it's something you want to own in a world where every central bank in the world is printing money. Silver was down overnight. This morning's up a little bit, but you can see how silver's in that channel, and it looks like it wants to head back to $10. Some other stocks I'm looking at. Look at 3M, and I've been I've been buying puts on this every once in a while because they're so stinking cheap. Pardon my French, they're stinking, bad word, but you can see the parabolic breakout in 3M. I mean, they make tape and they make Tyvek suits and stuff like that. You see it's breaking out to the upside. The earnings report launched at over 150. It's at 160 now. And what you have to watch with, and look how overbought it is as well, but these parabolic moves can continue to the upside. And the reason why I'm buying a small amount of puts is because they're so inexpensive. And I think when the stock does indeed pull back, it's going to be a nice little candle, like we saw a year and a half ago with Boeing. Boeing broke out, and you can see what happens. You get these big spikes to the downside, $20. So if 3M does a $20 3-day spike to the downside, you're looking at significant profits. Same thing with FedEx, which was upgraded yesterday. Parabolic move to the upside, and cheaper oil prices helping to fuel that. And finally, let's look at Home Depot, which is trying to get that triple-digit figure. You see a little red candle there. This still looks poised. I don't think the selling is going to start until it's over $100. And who knows? Every single dip since the lows of March 2009 has been a great buying opportunity. I saw it in Barron's this weekend. I've been saying it for a while, the fact that when you get stock prices continuing to the upside, people who don't or haven't believed in this rally finally realizing that, oh my goodness, this is, this could go on for years. So they're chasing the all-time highs. Every dip is a buying opportunity. You've got the central banks around the world printing money, forcing everyone into risky assets. We are in just that perfect storm of there's nowhere else to be but stocks. There's nowhere else to be but stocks. So. All right, and then finally, let's look at TLT, because you can see it's been rising. If you look back at the start of the year, and I'll go back a 2-year chart, the taper talk was supposed to kill the bond market. Bonds were supposed to sell off, but instead we've done the exact opposite. We had this massive inverted flash crash for the bond market a couple weeks ago, when it's the October swoon, and we started to gain some momentum. We're pulling back a bit here, which would imply the possibility of higher interest rates. We'll see. And the one thing that's helping the bond market here in the U.S. is the fact overseas you have countries that were bankrupt, that were about to go belly up, yielding less on their government bonds than here in the U.S., if that makes any sense at all. This market clearly is going to continue to do exactly the opposite of what everybody else thinks it's going to do, which is why you just have to stick with the trend. Look at oil breaking down here, also helping stocks. All right, UPB here, optionmillionaires.com. So I like GME. I also like IBM. I brought this chart up. I'm not into puts just yet, but you can see it's kind of just consolidating here in a bad kind of way, not a good way, because I think it's just setting up for a move down at about the 130 level. If you look from a long-term chart perspective, you can see this move down out of this channel that's very bearish, and I think it's going to make a move down to about the 130, even possibly back to this level here that we saw just after the financial crisis, about $120 a share. All right, UPB, optionmillionaires.com. Everyone have a great trading session. I'll see you in the chat room. Goodbye.